confidence in the country and the confidence in debt has gone, and the yields are far higher, and they're already choking on an interest rate payment which is approaching 25% of their tax receipts at the moment. And they've got 7 trillion to roll over. So when people say printer go brr, the question is, you've got to understand the mechanism. Somebody has to buy that as an asset. Scared money's got to want to be taking the other side of that trade.
Where we disagree is what happens afterwards. I am an end is nigh guy, but in a very positive way, because I see that all of the chaos that we're experiencing right now. I mean, we just spoke about there's a possibility that I might have to leave this interview because of a bomb air raid siren that might go off at any time. We're in, it looks like we're already in World War III. None of us like that. But essentially it's funded, all these wars are funded by the same money printing. And that is what's going to end.
Francis Hunt opens with a powerful observation. The crashes of 1987, 2000, 2008, and even 2020 were dramatic, but recoverable. In each instance, central banks were able to slash rates and flood the markets with liquidity. The system survived because the bond market, specifically the U.S. Treasury market, remained a safe haven for capital fleeing risk assets. But 2025 is different. Why? Because the 40-year bull market in bonds officially ended in 2020. When COVID struck, trillions of dollars rushed into bonds in a panic, but instead of stabilizing, this became a blow-off top for debt valuations. Francis emphasizes very few analysts recognize this turning point. It was a once-in-a-generation shift, signaling the end of confidence in sovereign debt. Now, governments are choking on rising yields. The U.S. alone faces a $7 trillion rollover in debt, with an interest burden approaching 25% of tax revenue. Simply put, the model is no longer sustainable. Printing money alone won't save the system unless there's someone willing to buy the debt. And there isn't. Many argue that the government can just keep printing. But Francis crushes that assumption with clarity. Printing only works if buyers exist. Someone has to absorb the newly issued debt. In prior crises, scared capital fled into U.S. treasuries. But that trust is gone.
I heard that we agree a lot on the timing, not specifically on a date or anything like that, but that we are very close to some kind of end game where everything in the monetary system just spirals out of control. I just wanted to ask you, when and how did the light go off in your head that we're not headed for some kind of slow attrition, grinding society, just continually getting poorer for decades and decades and decades? What made you understand that there's going to be an explosion of some kind and this is going to end?
Yes, it's a good point and it's a great question. And I want to highlight there's a tendency for people to want to just be extreme for the sake of being extremist, to take a really doomer view, or to it must all be shock and awe and all of that just for headlines. And I truly am not that like that. I refer to the major economic crashes we had in 87, 99, stroke 2000, 2008, and of course 2020, and then where we are today in 2025. And there's one key difference about today. This is my key thinking. In 87, Alan Greenspan dropped the rates, V-shaped recovery. The stock market plunged for the better part of 30%. I think it was the biggest amount in a given single day, and recovered pretty quickly. 99 going into 2000, people thought planes were going to fall out of the sky because of the millennium bug. I never thought that. I was not high doomer drama, the prophets of doom. Thor's going to be throwing anvils down from the sky. So it's again 2000. It passed. There was a bit of a mild recession for George Senior, which did for him after he said no tax increases.
Read my lips. Read my lips. No new taxes. Yeah.
Read my lips. That's right. So that was the main story. Again, 2000, we never saw anything. In fact, we'd started a property company anticipating a global globalization, which was going to lead to very low interest rates, because when you globalize and you go free trade, the pie gets bigger for everybody. And without even increasing your percentage of the pie, you get more largesse. And that tends to mean much lower a tendency for things to go up less because the cost of production is pursued to the lowest relative value in economics, which a lot of it was obviously China in the East, Thailand, Vietnam, etc. And you get a once-off boom almost, and we got an asset class boom. We had the dot-com boom, which was rebounded. We had stocks and properties boom, all as a result of this expansionism of free trade. The reason I mention all that is because we've now started a process of the reversing of that. And so once again, we were bullish. And as I say, I was in a property sourcing company. We used to buy whole developments. We did exceedingly well. We were putting property into people's buy-to-let mortgages. Bang, that came to an end going into 08, 09. Viciously once the quality of underwriting started to get under it. And I saw that personally. I felt it personally. I saw valuers were waving things through. This was in the United Kingdom, not even the United States, which had the robo signing. And I said, this doesn't end well. And sure enough, we had the yield curve inversion. So we've kind of, I think like me, you're not, this is not your first rodeo, and you've seen these things happen before. So when we talk, and answering your question, people tend to think, oh, you're just somebody who's going to scream, the end is nigh. The old man with the beard on the corner with, the sign on the street corner, the end is nigh. Having given you that prelude, the thing that's different about 2025 over all the others is that when you created sufficient fear, as you did in CV19, which I haven't referenced greatly in that prelogue, is money left the equity markets at a rapid rate. It left Bitcoin. It all stormed into fear trade, which was by the bond market. And we got a blow-off valuation in the bonds that was the end of a 40-year bull and in bond markets. That basically took us from 1980 to 2020. And that was an extreme capitulation in yields. You had a little window for governments that literally could borrow almost as much as they want, create as much stimulus as they want, and pay an incredibly low coupon rate. And they exploited it like hell, and that's what happened. And as a macro technical analyst, which is something, this is my pride, looking at charts on big time frames. I was very disappointed how few, in fact, I don't know anyone other than us, that said, hold on, this is a blow-off in valuations on the bond market, which is typically how markets end. A lot of people saw it in the stock market in 99 with the dot-com. There was no one watching the bond market that called that. Not that I know of anyway, in the public sphere of space. And we said, that is the end of a 40-year bull cycle. And it was a first call that was a reversal call on the debt markets. And it's continued to hold out true for the 4 or 5 years that have now followed. And you take an escalator up and you get the elevator on the way down. So that's been our thesis. So why is 25 different? Well, everybody who says, Francis, you're wrong, they'll just printer goes, brr, they're just going to do all of that. Everyone just repeating the whole narrative. To do that, you need to have a captured flow of money that is exiting other assets that is happy to rush into bonds. The problem that's happened with the United States is that the confidence in the country and the confidence in debt has gone, and the yields are far higher, and they're already choking on an interest rate payment which is approaching 25% of their tax receipts at the moment. And they've got 7 trillion to roll over. So when people say printer go brr, the question is, you've got to understand the mechanism. Somebody has to buy that as an asset. Scared money has got to want to be taking the other side of that trade. You can't just print go unless you yourself are self-monetizing it, which is, of course, the pure definition of a completed circular Ponzi scheme. And we've already started to see at current values of debt, the Fed has had to get involved and provide liquidity, 10 billion here and 10 billion there. So that is the premise and the justifications we provide and how things have changed as to why this gets disorderly and you have contagion. The other key point is you've now seen the big heads talking their book. Paul Tudor Jones, Stanley Druckenmiller in the tail end of 2024 in November saying, guys, we're short. This is a problem. You've got the real other big heads that have been writing books like Ray Dalio and all of that saying, this is a real problem. You have Captain America, Warren Buffett say, you know what? I'm living forever and I love what I do, but I'm calling time here. I've always been America. You won the lottery being born in America, but I'm handing over right now to the more internationalist guy who will probably diversify a whole bunch more, and I'm stepping down. And my parting comments are: I'm concerned about the dollar, I'm concerned about the deficit, and I'm concerned about the debt levels, and I don't know how anyone fixes that. So what's actually happened is some of the best minds in finance have joined our view that you're on the other side of the Rubicon now, given this debt market bull market. So that's quite a long form answer. So I'll just let that go back to you, and you can take off wherever you want.
All right, so I pretty much agree with you on all of that. I want to go into where we part ways, just to explain where I am, and you can fill in where you are. Uh, so I think
Rafi is optimistic. He believes the end of fiat will lead to freedom and decentralization. With no more central control over money, governments lose their grip and communities rebuild from the bottom up. Francis, however, is more cautious, bordering on cynical. He believes this is a controlled demolition, not an accidental collapse. A plan is already in place. The chaos is orchestrated to usher in a new system, one with even less freedom. A technocratic surveillance state powered by central bank digital currencies, CBDCs. Francis sees years of global coordination, from CV-19 lockdowns to bond market manipulation, as evidence of a synchronized effort to roll out a new monetary order with tighter controls. While Rafi believes the collapse creates a power vacuum, Francis argues power will merely shift, not vanish. The next system will be digital, biometric, and far more centralized. Francis warns, we're not heading into freedom. We're being herded into a digitally controlled monetary grid. He names organizations like Palantir and central banks already testing and discussing CBDCs openly. Surveillance, data harvesting, and biometrics are not theories. They're policies in motion. The erosion of liberty is already underway, and CBDCs are the final piece. With programmable money, governments will control how, when, and on what you spend your currency. That isn't freedom. It's the end of cash, the end of privacy, and the end of economic self-determination.
where we disagree is what happens afterwards. I am an end is nigh guy, but in a very positive way, because I see that all of the chaos that we're experiencing right now. I mean, we just spoke about there's a possibility that I might have to leave this interview because of a bomb air raid siren that might go off at any time. We're in. It looks like we're already in World War III. None of us like that. But essentially, it's funded. All these wars are funded by the same money printing. And that is what's going to end. Now, that in my view, that ends because they can print money. They can do whatever they want. They can push a button. But the question is, does that have any value? And as you said, it has to capture money flows from people who have value, who want to put it into bonds to capture that money, to capture that flow in order to continue the wars. That's going to end. And so I say that once that happens and the dollar has no more value, therefore no other currencies have any value, and the core power of all of these governments that are conducting all these wars is the fact that they can leech value off of us. Once that ends, yes, we do have a lot of chaos. We have a lot of societal breakdown, especially in the big cities, but at least we end the core of power that these governments have, and then it's up to us to rebuild. And I think that's going to be mainly the stackers. Um, so I think you're more on the side of we head into a totalitarian dictatorship of CBDCs. But how is that possible if the currencies have no value? How can they retain control by just adding another layer to the pyramid that's already collapsed?
So there's more orchestration in our model than possibly in yours. People Our position is that this particular event has had some degree, if not a very high degree, of planning. In other words, it's a synchronized, I call it the leper colony. There is no nation really of sound money. Some might point to Switzerland, for example, being less bad, and Singapore or Uruguay in Latin America, for example. But generally, if you're talking about major nations, this is a leper colony. We all joined the leper colony and we kissed the chief leper to ensure that we were all infected by the same same disease, which is over-indebtedness, over-expenditure to our income. That points to a degree of it's okay coordination that runs throughout most of the Western world and most of the other nations, for that matter, including emerging markets too. So there seems to be one predominant school of thought, and it's kind of the neo-Keynesian turbo plus MMT type theory. I wouldn't say everybody is in exactly that camp. That's a very broad generalization. Some are a little bit more stoic. And there's some parliaments where there are some people that actually speak up for sound money and gold. Switzerland, quite popular, comes up. And of course, you have those movements in every nation, like America, Ron Paul, etc., etc. But they haven't won the day. What's actually happened, and we've seen this with Trump, with the big, beautiful bill, is that in actual fact, there's an increase of 5 trillion on the debt ceiling. So despite all of his comments surrounding potential bankruptcy of the United States, he's gone for a massive spend, I think 1 trillion on debt. There's a move of the debt ceiling. So it's talk one game to get elected, but in the end, they get bent to the agenda of a massive growing government. Government doesn't vote, turkeys don't vote for Christmas in that sense. And we have a self-propagating, enlarging government that keeps voting for the statist expenditure in the statist areas, such as military-industrial complex, etc., and many others. So with that, they are plowing a certain course that leads to that, and they would have recognized that. And I suspect that they will have a plan for ensuring they retain control. So my study of history, or the history of money and power, is that those two go hand in hand, and there's no way that the next generation is not being prepared for. And what we're probably seeing is a transition of one system into a slightly more technocratic, that's in our model, oligarchical system, which has a higher degree of control. So data, surveillance, these things have become far more mainstream. And the biggest victim, in our view, has been personal liberty and privacy. And I think if you take the events of CV19, that's held up. If you look at, various statist organizations, there's been a lot about Palantir and other organizations doing various databases, biometrics, all of this. This is a very tight digital surveillance outcome. And I don't think we are all you and I are going to get that freedom to write our new system come this explosive end. We aren't the people that are holding the levers in power. And this is, I think, an engineered dead end whereby what's already in the wings gets put into place. You look at the SNB's Carstens, some of his commentary about the benefits of CBDCs. These are people that are talking, planning, trialing, running, have already begun working on a new system. So I don't think I'm a tin pot hat conspiracy theorist for just listening to them and repeating what they say.
What do you think about this video? Comment down below. Don't forget to like and subscribe. This is Nifty Invest. We'll see you in the next video.